Good morning, everybody. Let me say good morning real quick before Discord boots me off. Microphone check. How's everyone doing today? Can you hear me? Feeling good about the world? Ready to take the bull by the horns? 5 by 5. I like it. Guys, it's nice to have you here this morning. Good morning, Gary, Luciano, Sofia, Dave, Alex, and the rest of you lurking in the background, waiting to post pictures and ask questions, because I'm sure that's what you're going to do today, right? I hope so. Um, my name is Mark Novak. I'm here every day, Monday through Friday, 9 a.m. to noonish. That's you. You're a lurker. You pop out of the shadows every now and then, Ron. Like to pop up and go, hey guys, check out this smart stuff, and then just disappear back into the distance, which I love. I appreciate it very much. It's Friday. We made it. End of the week. And man, look at all this news going on today. So let's go ahead and start with that, guys. Let's take a look at the news. If you were watching at 8:30, I think there was a pretty big jump in the market at that 8:30 news. Gave it a little bit of a push. And then we have some low impact news coming up at 9:15. Capacity utilization rate, industrial production of M&Ms, I think. It's the delicious candy that melts in your mouth, not in your hand. But they'll be talking about it. It's low impact, not a huge worry there. I like to be aware of it, but I'm not gonna build my day around it. But then at 10 a.m., there's the consumer sentiment, inflation expectations. Guys, this red box, this orange box lets me know that there may be a little giddy up behind the market as you come into it. Let me open this up. I made this picture for you guys because we had a great conversation the other day about, I saw people asking, hey, do you trade the news? Do you try to anticipate? We really don't, guys. It's not like trading places where they got the orange juice crop report and they knew that it was frozen and they thought, oh man, I better go short, right? Really, we just don't want to be in the way when it releases. So here's a nice little key. You have high impact, medium impact, low impact. Guys, I am guard up at high impact, medium impact, and I am aware at low impact. And it's not that I'm worried about what they're saying. I just don't want to be in the way when they say it. So every morning, that's part of my routine, is making sure that that I'm not in the way. There was news hit and it jumped, right, Jay Solar? And you didn't have to know what it means about core retail sales or retail sales. That's pretty obvious. But you knew that it was going to happen. So it gave you an opportunity to kind of hop out of the way, which I did. It makes it easier for me. After I check my news and before I open my charts, guys, I make sure that I go through, especially if you're on NinjaTrader 8, I go through these stability instructions every morning. This is my routine. Gary, how did I know you'd have a picture for that? I was hoping somebody would be with me on Trading Places. Guys, every morning I'm deleting my cash and ticks. You know what, Rabdul, it's just people with bigger pockets than me is the easiest way. I don't care who's doing it, but let's say that you have 10,000 contracts in the S&P, right? And they give you bad news and you dump 5,000 of them, it's going to make the market move. Or they give you good news and you buy an additional 10. It's going to make the market move. So it's these people that are creating movement large enough. And then there's the people on the other side that are maybe taking profits and going. But it's really, and I think maybe it's the big money investors, right? It's these guys that move the market, these guys that react to the areas, these guys that create the momentum. These are the guys that are moving the market. It's not us, guys. We're like remoras. What I teach here, what you're going to do with the Nexgen software until you're up to like 1,000 contracts, we're going to let these guys do everything. We're going to let them create the movement, the motion, the momentum. We're going to let them identify the areas. And guys, you'll be identifying the areas at the same spots they do. And we'll let them react to them. And then we'll find our opportunities. So it's just big money, guys. That's it. That's all it is. Hopefully we'll all be big money guys one day, right? But it takes a while to get there. It takes a lot of capital. Every morning, guys, I go through how to make sure things aren't going to crash. If you're using NinjaTrader 8, guys, it's a wonderful platform. It really is, and I rarely have problems with it crashing. It takes a solid computer to run it, though. Go through this, deleting your temporary folders, getting rid of your recovery folders, getting rid of cache tick, making mine too, Lenny. Making sure that everything is solid, that your computer is optimal, that everything is great and happy and ready to go high power. That's my second routine every morning before I even open up NinjaTrader. And then I don't know if you guys saw, John posted this. I wanted to bring this up for you guys. A lot of us were working off of old computers. I was working off of an old computer when I first started with Nexgen. And I was like, man, I'm struggling. It takes 8 minutes for my charts to load. And isn't that funny that 8 minutes feels like a long time? This was a deal that was put together through Easy Trading Computers specifically for Nexgen users, creating a computer that handles anything and everything that Nexgen can throw at it. A lot of free upgrades, more RAM, more hard drive space, crazy fast processor. Guys, if you're in the market for a computer, these guys are running a great deal. I was talking to John about it yesterday. He said it's about $5,000 worth of computer, that they're doing it for $3,000. And if you go over to the Traders Chat side, there's a couple people that have already purchased them. And they're ecstatic with the results. So if you were thinking about upgrading, guys, this is your link right here. Treat yourself, right? Why not? Treat yourself. And it'll be great for those shoot 'em up games on the weekends when you're not trading. So I've checked my news. I've set things up. I'm feeling good about the world, guys. Now I just need to know what I'm going to do with this crazy software, right? What am I going to do with this next-gen software? Well, let's go to the tutorial section. It's going to give me a plan of attack, and I'm going to give you a plan of attack. And guys, we're going to keep it simple today, just like every day. We're going to keep it simple. The first thing that we're going to focus on, guys, the first hour of this classroom, we're going to talk about 3 rules. And each rule is going to provide you an advantage. Jay Solar, I took a picture for you this morning, by the way. Don't let me forget when we talk about termination conditions. I was thinking of you this morning. Oh, I wonder if this is it. Gap example yesterday. Coming from the long, goes up, and then looking for that continuation up. I love it. You knew that this is great. And I like that you put it all together. Beautiful trade. Jay Solar, that's how you rock it, right? I mean, that's the way. It's funny that you would do that. And guys, I'm going to bounce around today because it's Friday and we're going to make sure you get everything you need. And I was talking about this one just because we were talking about gap theory yesterday. And we'll go more into it. And that same gap theory, right, keeps you out of that trade so it doesn't get run over. And then Jay Solar just posted an example of how his chart reading using this example keeps him not only out of the short trade, but he begins to look and wait for the best. Great job. I love the picture. But let's talk about becoming a chart reader, right? So guys, we're going to focus on one trade this morning. And then as we get into the second and third hours, we're going to expand and talk about whatever you want to talk about. But we're going to build a foundation. You guys are going to have the most solid platform that you could imagine. And you're going to do that with a high probability trade, guys. And a high probability trade means that every indicator on every chart agrees for the trade. Your triggers will be the strongest. There will be nothing in your way. You're going to have the best entry where that market is likely to continue. And your focus on this high probability trade does a couple things for you. The first thing it does, and the most important thing that it does, is it teaches you to read your charts. Because 90% of what we do as traders, 90% of your day is just going to be reading your charts, guys. Reading your charts, taking the information, understanding what the indicators are telling you. Good morning, Bobby T. And then 10% is going to be actually trading, taking those advantages and trading. And I always say it, but the hardest thing about being a day trader is doing nothing when there's nothing to do. 90% of the time, there's going to be nothing to do. 10% of the time, you're going to be able to hop on those advantages and get into a high probability trend trade, get into a trade with all the advantages. And that's what we're going to talk about the first hour, the high probability trend trade. It's only 3 rules. You have to remember 3 things, and you have to remember it on only 2 charts. The recipe for a trade for my brand new users, for my demos, for my first 30 days, for my first 60 days, the people working on consistency. This is it, guys. Focus, keep it simple, be great at one thing, and then expand to another. It's 3 rules. Strong triggers, no termination conditions, and then using a limit order at areas. These 3 rules provide 3 advantages down here in yellow, and these 3 advantages are the recipe for a trade. This is what we're going to talk about for about 30 minutes. Your 3 rules are going to happen on 2 charts. The patterns that you recognize through your chart reading apply on any chart. Strong triggers, rule number 1 on the 13.2. Strong triggers will be strong triggers, whether it's a 13.2 or a 5.1 or a 34.5 or an 8 range or a 34 range. But strong triggers will be strong triggers. Termination conditions for the high probability trend trade are going to happen on the 13.2. And then as you grow with the software, you'll begin to recognize termination conditions on other time frames, other areas, other types of charts. But what the 13.2 is it provides you a broad stroke of a brush. It gives you the overall temperature of the market. And we use the 13.251 here in class because it will present more opportunities than higher time frames, and because it moves in a more readable fashion than lower time frames. It's just a great education tool. So we're going to use 1 bar on the 13.2 to determine the trend of the market. If the background is green, we're in an uptrend, and you should only be looking for rules to be met for high probability trend trades long. If the background is red, we're in a downtrend. You should only be looking for rules to be met for high probability trend trades short. As I had a conversation with my brother yesterday, and I don't know if you guys know this, but I analyze everything I do. Every trade I take, I go back and study. Every decision that I make in the market, I go back and study, and I look at it when I don't have an emotional attachment to the trade. And what I can tell you is that over the last year, my biggest challenges, the biggest chunk of my losing trades come from fighting the trend on the 13.2. Creating an opinion about whether an area is likely to hold and ignoring the fact that I'm in an uptrend or a downtrend. Give yourself that safety net. Let that be your first advantage, trading with the trend. Rule 1 happens on the 13.2 chart. You're going to have strong triggers to set the tone for the direction of the trade, and you're going to have no termination conditions. Rule number 2, making sure that there's nothing in your way, that you have a clear path. And we're going to talk about how to identify both of these. When these rules are true, guys, and only when these rules are true, will you go to the 5.1 chart. And this is your entry chart. Here you're going to refine that broad stroke of a brush. You're going to take that 5.1 and you're going to take this 1 bar and you're going to whittle it down. Your 5.1 chart, what you see on 1 bar on the 13.2, maybe 15 to 30 bars on the 5.1. But we're going to refine that broad stroke of a brush. We're going to identify the best spot for entry. And by doing so, it's going to allow you to reduce risk. It's going to allow you to maximize your profit potential. So guys, we're going to keep it simple. We're going to keep it focused. We're going to keep it 3 rules, 2 charts. And I'm going back to my last samurai picture, guys. We're not going to have too many mind, right? We're going to keep it focused. We're not going to look at everything on every chart and try to make sense of it. We're going to look at the absolute best, the advantages that are present, and then take that trade and learn how to recognize it each and every day. And it all starts with trading with the trend. Guys, there's two sets of triggers on your 13-2, 5-1, all of your charts. The small triggers, the faster moving triggers, they're these solid lines. And the large triggers, the slower moving triggers. These two work together to give you an enormous amount of information. But the first thing they're going to do is they're going to tell you whether we are in an uptrend, green background, or a downtrend. When the small trigger lines break above the large trigger lines, your background is going to paint green. That green background keeps you focused on finding rules being met for a high probability trend trade to the upside. With a red background, it happens when those small trigger lines break below the large trigger lines, paints the background red, just keeps you focused on the trend, looking for the rules to be met for high probability trend trade short. Pretty simple. Your software is going to do it automatically. There's nothing to learn, nothing to remember. It's just the whys and the hows. Every trade starts with strong triggers because strong triggers provides the advantage of momentum. Strong triggers defined. Small triggers will break above the large triggers. The large triggers will begin to widen, so will the small. There's a gap between the small and the large. It's the space between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. Same thing on the small side or the short side. Small's below the large are wide. They're angled in the direction of the trend. It just lets me know, that strong trigger look lets me know that the odds are favorable for the market to continue in the direction of the trend, guys. So you're going to hear me say in class quite a bit, odds favorable momentum. Hey, Bobby T, that trade you just posted, did you have odds favorable momentum? Hey, Thala, hey, Jay Solar, Gary, was there odds favorable momentum? Or did those small trigger lines break back into the large trigger lines? Did they weaken the large trigger lines is what we call it? Because when this happens, anything can happen up or down, guys. And it goes from having the advantage of momentum to becoming kind of a crapshoot, sort of a, I hope everything works out. So here's a great picture for rule number one. I'm going to simplify it into one picture for you. Two types of trigger looks, guys. Smalls inside of the large, anything can happen. Smalls outside of the large. Think of it like scissors. When the scissors are open, it's ready for business. When those scissors close, you're not cutting anything, right? Waiting for that odds favorable momentum, looking for your opportunities when you have the absolute best of the best. And then when those trigger lines don't agree, one is up, one is down, one is down, one is up. Guys, this is kind of a transition phase. This means the market's trying to figure out what it wants to do, right? And new users will go short and then long and then short and then long. And this is where people try to predict which way the market is going to go. So as a brand new user, or even as a user with a very solid plan, doing everything right, that odds favorable momentum is going to give you the absolute best of the best opportunity for success. It's a simple look, guys. Give me a Y in the room if you're with me on it. If you feel comfortable, when the smalls are above, the large are wide, look at that momentum. Same thing going to the downside. How easy is it to recognize? Smalls above, large above. Look at the space. Look at the momentum. It's unbelievable, right? Smalls below. So easy to recognize, guys. Let that be the precursor. It does rock. I agree with you 100%. Because what happens when you've got a freight train of momentum going, it's hard to slow that market down. So let that be the beginning, guys. I see a lot of lost trades in this room when people abandon odds favorable momentum. When they say, you know what, I'm going to give that one up because I'm bored, because I want to be in a trade. And it typically separates them from their money. So the next thing, once we have momentum, the advantage of momentum, what do we need? Well, we need a clear path, right? Let's get those rules up there again. We have strong trigger lines. We have momentum. Let's make sure that there's nothing in the way. Manufacture trades. Thank you, Joel. I do that. We all do it, right? Until we trust our rules, we will manufacture trades. We'll use clever words like the rules not met, but. Let's make sure we have a clear path. What does that mean? It means don't trade into a termination condition. What's a termination condition? Well, it's an area that may reverse the market based on a comparison of the Fibonacci area and the T3 trigger lines. Guys, these Fibonacci areas that you're looking at each and every day, we're not the only people that know that they're there. Those sharks, those institutional traders, they know exactly where these key areas are. And what you're going to find is that price reacts to them. So what we're going to do is create an advantage for you to recognize when that reaction might mess up your day. And we're going to do it with a simple comparison, guys. A simple comparison of areas and trigger lines. Let me find my picture of the areas. Here we go. What are the areas on the 13.2 chart that we're going to compare? Well, we're going to look at divergence highs. And a divergence high simply means that a pivot is made and momentum is lost. I want you to equate divergence with a loss of momentum. We're going to look at divergence lows, the cyan line, the exact same concept. Pivot is made, momentum is lost. Your software is going to automatically print this line for you to let you know that momentum is not following price. Red Fibonacci resistance, blue Fibonacci support, and these yellow one-to-ones. All of these are areas that may stop the market, and we're going to learn how to determine it by using Fibonacci and those trigger lines. And there's another one, the large chart midband. You know what, Jay Solar? I think that we all do. I think that this is a great topic. Maybe a little later in the day. Guys, everything that you do in your first 30 days is revolving around developing trust. Believing so wholeheartedly in the rules that you trade that it becomes difficult for you to deviate from the rules. And the problem is we're all human, right? So we are subject to boredom. We're subject to opinion. And I can tell you guys that the more you stay focused singularly, the more laser focused on a simple concept you are, the more comfortable you become with that concept over time. Jay Solar, I still deviate from the rules once in a while too. I did it not yesterday, but the day before. I found myself, I took 3 trades with opinions, and I lost all 3 of them. And then my rules brought me back. So it's normal, and I don't want you guys to beat yourself up when you do it, but I do want you to post it in the room so that we can talk about it. So how do we identify a termination condition? Guys, super easy concept. And I say super easy not because day one you're going to get it like you've been doing it for your whole life, but super easy because if you focus on the simplicity of the recipe, it becomes a pretty recognizable look. The recipe for determining whether or not an area is likely to hold or likely to break, whether we should trade into the area or whether we should not, is when price reaches an area, meaning the price bars come down, come in contact with the area. The only thing that you have to do is ask yourself, where are the trigger lines? And guys, if the trigger lines don't break through an area, you're not taking a trade into that area. Price reaches Fibonacci support, check the trigger lines. If they're not below the support, don't take any more trend trade short on the small charts. Pretty simple, right? Price reaches the area. Triggers don't break, don't trade into the area. Price reaches resistance. Triggers don't break, don't trade into resistance. Price reaches support. Triggers don't break, don't trade into support. Guys, termination conditions, fighting the trend, total killers. Now, some of you are thinking to yourself, well, Mark, if I can't go long into resistance and I can't go short into support, what am I supposed to do? Well, you're supposed to remember and embrace the fact that 90% of what you do throughout the day is just going to be chart reading. 10% of what you do is going to recognize those advantages presented and turning it into a high probability trend trade or a high volume area trade or a momentum trade. So resistance to support to resistance, triggers don't break. Guys, we're creating a strong top here. A termination condition that creates a full reversal is what we call a strong top. And on that same token, a termination condition that creates a full reversal is what we call a strong bottom. And I say that slowly and directly because if you look at your first 30 days and beyond, focusing on the 5-1 trend trades that happen after a termination condition on the 13-2 chart is the highest probability trade that you can take as a Nexgen user. Focusing only on the 5-1 trend trades that happen after termination conditions on the 13-2 chart is exactly what we're talking about right now. So when you get a termination condition from a high, it creates a full reversal, gives you odds favorable momentum, you'll begin to look for those opportunities. When you get that termination condition from a low, large triggers go from red to green, smalls get to the correct side, give you momentum, you have a clear path. Guys, there's your potential entry on the 5-1. Circling this tail, this is a potential entry. This is your highest probability trend trade. Is everybody comfortable with that? Pretty simple recipe, right? You know I'm going to share another picture. Guys, I take about 50 pictures a day, I think. Try and keep up with me. You'll be amazed at how quickly you begin to recognize stuff. All right, here's your recipe for a termination condition, guys. No triggers through the area. The area is not broken. No clear path. Sit on your hands, right? Smalls and large get to the correct side of the area. The area is broken. You now have a clear path. Jay Solar, I'm gonna respectfully disagree. There's a couple things that have to happen because this could have been a great termination condition, right? But it broke, and it really is. So there's more to it than just saying strong termination conditions open up opportunities to enter. There's still an order of events that has to happen to take yourself from hoping an area holds to expecting an area to hold. And I've got a great picture for that too. I'll share that one. Don't let me forget. Guys, there's a next look. And I want to show you this one. And I want to help define it a little bit. Right now, we're talking about high probability trades, right? We're talking about you either have a clear path or you don't. Absolutely. Jay Solar, when a termination condition creates a full reversal, absolutely. Your best trades come after that happens. And then there's a way to find it on a smaller, faster chart to give you that quicker entry, and it's what we call a high volume area trade. And we can talk about that later in the day if you want. There's a set of rules for it. There's conditions that must happen, but you're absolutely right 100%. It begins with a fantastic termination condition. So high probability. You either have a clear path or you do not. Pretty black and white, guys. The trigger lines are either through or they are not. Your ability to read charts, your ability to understand the information being given to you, to recognize termination conditions, the strength of triggers, all that wonderful stuff, is going to take you to a medium probability trade. And guys, a medium probability trade is defined as when most of your indicators line up for a trade, however, a small issue exists. Your ability to read your charts from your study on the high probability trend trade is going to have you identifying that small issue. And this will be the vast majority of your trades, guys. There will be trades that have one thing about them that you don't like on almost every trade you take. You'll take these trades, you'll manage them assertively. And if there's trouble in your way, you might take a portion of the position off at that trouble spot. Your ability to read charts is going to let you identify that trouble spot. You can reduce risk, get to a zero loss level. Guys, medium probability trades happen more often than high probability trend trades. But you need to be able to read your charts to understand how to take them. And your first medium probability trade, probably as a brand new user, is going to be what we call a 50-50 trade. And I'm going to type on this picture because I realized I didn't put that in there. So this center one, we'll get rid of the termination condition, is what we call a 50-50 trade. And a 50-50 trade simply means 50% of my triggers through the area, 50% of my triggers not, right? The smalls have broken through, the large have not. 50-50 has nothing to do with your odds of success. What it means is that you have an area with the potential to break. Because of that momentum in the market, this area has the potential to break, but it hasn't broken yet. It is not a clear path. Rule number 2 is not met on a 50-50 trade. So when executing, you have to manage assertively, right? When executing a 50-50 trade, you might absolutely insist, let me see if I can get this to type. Stop it. It's okay to insist on a perfect entry on the 5-1 chart. Because you don't have that clear path, because that's your small issue, don't let there be issues on any other charts, if that makes sense. So that's going to be your first, whoops, I guess that picture works. That's going to be your first medium probability trade. So if we go back to termination conditions, smalls and large get through the area. See how support acts as resistance. The market continues down to the next area of support. Only the smalls break through, but the large are still above. Maybe a potential area if it's perfect, and then price reaches the area, absolutely nothing goes through. No trades. Termination condition creates a full reversal. Full reversal gives odds favorable. Odds favorable gives us one of those tails on the 13-2, letting us know that this is the highest probability trend trade we can take. We're going to look for these. But the reality is the majority of your trades are going to be small triggers through an area and large triggers not. You still have the tail, you still have the momentum, you just don't have the clear path. At this point, you can allow your entry on the 5-1 to be perfect. And that's going to create an advantage as you learn these medium probability trades. And you see them all the time. Still a great trade, just not a high probability trade. Does that make sense to everybody? We're pretty good with that? And then one more termination condition that I want to talk about is sometimes the market turns from nowhere, it seems. You know, we're very accustomed to seeing price reach Fibonacci support or price reach Fibonacci resistance. Sometimes you're going to get a little U-turn in the market without the advantage of that key Fibonacci area. This final termination condition is the only one that I'm looking for on a 5-1 chart, guys. And this is 3 divergences in the same price range may terminate a trend. So the first way, 3 may terminate, okay? And that on its own is a termination condition. 3 divergences and your small triggers go from odds favorable to anything can happen is the same. It's still a termination condition, but it's a little stronger. So it's not mandatory, but it adds a little strength to it. And then 3 with the higher pivot or a lower pivot from a high is even stronger. So we're looking at 1 termination condition and 3 different levels. But really, 3 divergence in the same price range may terminate the trend, guys. It means that we've lost momentum 3 times. What you're doing on a smaller, faster chart is you're recognizing change that you won't see on the 13-2. You're taking that refinement chart and you're seeing this slowdown 3 times and saying, hey, I need to back off for a second. The market may push up. Becomes even more powerful. Smalls are outside. Even with a loss of momentum, it still pushes. But when the smalls go inside, we're losing that momentum visually once again. And if that third pivot is higher than the previous, now we can visually see that not only can price not exceed the previous pivot, but we've lost momentum once again. You're going to see this look from a low or this look from a high in situations like this. I have a clear path, there's nothing in the way, and the market goes up. Those three divergences will help me identify this. Same thing at the top, even with odds favorable momentum and everything heading that way. If I see those three divergences, it lets me know that things may be changing. And when you begin to take medium probability trades, it gives you the opportunity to manage out assertively. You'll be able to see that change faster, recognize that things aren't happening the way they're supposed to, and get out of a trade maybe with a little loss or no loss or a small profit. So termination conditions give you the advantage of a clear path. Strong triggers give you the advantage of momentum, guys. When those two happen on the 13-2, the only thing left for you, the Nexgen user, is to get that best of the best entry. And now we're going to pinpoint with pretty amazing accuracy where the market is likely to continue. Now I'm going to take a big drink of water. During the live market, this is what your 13-2 is going to look like. Or this is what your 5-1 is going to look like, excuse me. The 13-2 is at its absolute strongest. The 13-2 has nothing in the way, right? Not a thing. You're going to focus your attention on your 5-1. Nothing but up bars, strong triggers, and you're looking at these large triggers. And you're looking for favorable large triggers, which means that your large triggers are stacked one on top of the other. They're overlapping because when you have this absolute best strong trigger look, favorable large triggers, it's going to create a smaller window of opportunity. And that window of opportunity is going to happen at this reversal bar. So there's two schools of thought in the market. There's your large chart, which represents the large crowd, right? It's kind of groupthink. The large crowd says we're going up. The large crowd says that we have momentum. The large crowd says that there's nothing in the way. Guys, we're going to rely on a silly little group of yahoos that wants to fight everything the large crowd is doing. This small crowd is going to force a pullback, and a pullback is nothing more than a small retracement in price counter to that underlying trend. It begins with a reversal bar on the 5-1. With all of these up bars, we're just looking for a reversal bar. And when we have it, your job is to create a window of opportunity, that area where the market is likely to continue. Rule number 3 says that we're going to use a limit order to buy or sell a pullback. Isn't it? To buy or sell a pullback at an area inside of favorable large triggers. What's an area? For a high probability trend trade, it can be fibs, it can be a mid-band, it can be one-to-ones. Fibs, mid-bands, one-to-ones, but they need to be inside of those favorable large triggers, right? It needs to be inside of those strong overlapping, large and synthetic, going in the direction like an angry shark about to breach triggers. Why? Because price loves to pull back to triggers. And then when I give it an area inside, guys, it's like throwing a tennis ball as hard as you can at a brick wall. That's its bounce point. So you're going to activate a limit order right at the top of the window. Find that highest point of support inside of favorable large triggers. Activate a limit order, and if the market comes back to you, guess what? You're long. You're in a long position. You're trading with the trend. You're trading with strong triggers, means that you have the advantage of momentum. You're trading with no termination conditions, which means that you have the advantage of a clear path. And you've entered the market at the area where it's most likely to continue. And guys, you guessed it, you have the advantage of an entry area. The recipe for a trade has been met. It's a high probability trend trade. And guys, this is a trade that typically wins 70 to 80% of the time when you follow this recipe. Your initial stop will go down here where the market shouldn't go outside of that window of opportunity. But once the market begins to move in the direction of your trade, you can reduce risk below that reversal bar. And because you waited for the pullback to those key areas, guys, you've maximized your profit potential. And it all stems from finding that area inside of favorable large triggers where the market is likely to continue. You may hear it called the woo in here, the window of opportunity. Here's your reversal bar. From the bottom of your triggers to the top of your triggers, what are the areas inside? The only thing I have is a mid-band. What a tight little area where the market is likely to continue. You'll notice these one-to-ones are outside of the area, not in the large triggers. They're not a part of the window of opportunity. Here's your reversal bar from the top of your triggers to your bottom of your triggers. Your highest point of support is a mid-band. Your lowest point of support is one-to-ones. This support is outside of the trigger lines, therefore it's outside of the window. This teal area shaded is the area where the market is likely to continue. Your limit order goes at the top of that window. One more, reversal bar. Top of the triggers to the bottom of the triggers. Look at this, one-to-ones, mid-band, one on top of the other. This is your area where the market is likely to continue. And guys, yes, absolutely, it may overrun that area a little bit. But this is your absolute best of the best. This support is outside of the large triggers. It's not inside the window. Guys, is everybody good with this? Because we've gone through the advantages, right? We've done our recipe. Momentum, clear path, and an entry area. So now you know the rules, right? You know where to find them. You know where to study them. You know where you can go back and take a look at them. So now it's time to practice them. I'm going to give you your Friday gift. Guys, I'm going to give you this high probability trend trade checklist. Jay, I believe I'm using 5-1 Renko 2023. I believe. It is whatever the most current, let me get you right here. It is whichever the most current available is from John Novak. So if you're not sure if you want to rebuild, and I rebuilt Monday, I think, maybe Tuesday, deleted everything, started fresh. I do that about every week or two. Go through, knock it all out. Go to the resources page, guys. You can get all your NinjaTrader 8. If you're using 7, you can get it all right here. But it's a great idea to reload and take a look every now and then. And if you're not sure how to do that, how to start fresh, here's your how-to. This is a great project for the weekend, guys. Start brand spanking new every week. So Jay, I'm 99.9% sure my 5-1 is Nexgen Renko Part 2023. Guys, look at what just happened. Odds favorable. We have a 50-50 trade, right? Small's above the area, large or not. Is it just me? Or did that price just pull right back to a mid-band right there inside of those favorable large triggers? Remember I said now your job's to develop trust, right? For 20 days, guys, 20 trading days, your first 30 days. Here we go. Every time you see this, take a picture. Take that checklist that I just gave you in the room. Does it line up? Termination condition created a full reversal. The full reversal gave me odds favorable momentum. There's a yes. Odds favorable momentum, small above the large are wide. They're angled in the direction of the trend. That's a yes. No termination conditions. Guys, it's okay to annotate that chart. This is a 50-50. The smalls are above, the large are not, which means that if I'm going to take an entry on the 5-1, it's okay to let it be perfect. What does perfect mean? No divergence, right? Strong triggers. Tiny little window of opportunity. Guys, this is the absolute best of the best 50-50. Don't miss this look, right? That's your one. So take it, share it, get it to screencast. And then once you get it to screencast, you have two jobs. Your first job is to post your trade in the room so that we can get feedback, right? So that I can talk about what you see, what you did. Did you read it correctly? Did you enter at the right spot? Did you do everything you could have done to assure your success? And then the next thing is to go to your spreadsheet, guys, and get that link into your spreadsheet. Go back and study. I mentioned earlier today that I go back and I study everything that I do. Everything that I do every day, I go back and I take a look and I study. This is my absolute best lick. It fits the checklist 100%. And I'll be damned, it went right to Fibonacci resistance, guys. From 41.75 to 41.81. Congratulations, those of you that took this trade. This is everything that we look for. Are there any questions about the high probability trend trade? How do we study it? Do you see how I circled and it lined up? I know the rules are met. Can we find another example? Smalls through the area, large triggers up, strong coming from a termination condition that creates a full reversal. If I circle the tail right here on this chart, 8:11 a.m., what's it look like? Have to scroll back a little bit on the 5-1. Guys, did that market pull back to support inside of favorable large triggers? What do you think? Strong triggers, no divergence. From the top of the triggers to the bottom of the triggers, your only area where the market is most likely to continue is right there. Your initial stop goes outside of the window of opportunity. When it begins to move in the direction of the trade, you reduce the risk. Give me a Y in the room, please, if you recognize that, once again, this is a perfect medium probability using the rules of the high probability, that strong trigger line, that 50-50, that area of entry. Guys, the only thing that you need to do as a Nexgen user is learn how to use this checklist, right? Once again, I'm going to share it to screencast. Two things that you have to do as a new user to get to where you want to be. The path to success, you're going to post in the room. Every time you take a trade, win, lose, or draw, you need to know if you're doing things right. That's where I come in, guys. Post it in the room. Let's have a conversation about it. And then open up your spreadsheet and make sure that you have a link to that perfect look so it becomes a look that you can repeat every time. Guys, I don't even know how many anymore. There's 120 plus another 32, about 155, give or take. Pictures of high probability and medium probability trend trades, 50-50s. Guys, I'm going to give you my spreadsheet this morning. There it is. You've got mine. Your job this weekend is to burn this image into your head, because your first 20 days, the only thing that you're focused on is a checklist-based entry. Don't worry about the management. Don't worry about anything other than making sure that you get in at that area inside of favorable large triggers, giving yourself the best chance of success. Great entries create manageable trades, ladies and gentlemen. This is an example of how to write the most simple plan as a new user to get you where you want to be. Identify your entry. Use the phrase, my trade is. Make it personal. My trade's the high probability trend trade. To enter this trade, I must have the conditions of this checklist met. And then, guys, be honest with yourself when you use the checklist. If you don't have odds favorable momentum, don't mark yes. If there's a termination condition, don't mark yes, right? Be honest. I have a friend that you can tell him a story and he'll repeat the story the way he wanted to hear it, not the way it was actually told. This checklist can be very much like that. You'll mark up your checklist the way you wanted it to be, not the way it was. And if you go back after the fact, and this is why I study everything I do, if I go back and I study after the fact, well, now I'm not emotional. Now I don't have adrenaline. Now I'm not anxious. I can ask myself, did I really have the rules met for this trade the way I wanted them to be? And the answer is absolutely yes. And sometimes the answer will be nope. I fudged my rules a little bit. So guys, define your entry and then start taking pictures of that great entry. Grab a couple of them, put them into your trading plan here. Study them, scroll back, circle the tails. Steal pictures, guys. Every time somebody in this room posts a high probability trend trade, and I say, this is amazing, let me put it in my spreadsheet, put it in your spreadsheet. The more pictures you take in the first 90 days, guys, the better off you are. 15 pictures a day gives you 300 pictures a month, 900 pictures by the end of 90 days. I'm up at about 7,000 pictures. John Novak is up at about 29,000 pictures, guys. All you're doing is recognizing patterns that create success. When you post every picture that you take into your spreadsheet and you go back and study it, not only are you recognizing the looks that create success, but you're also going to create an awareness of the patterns that you're creating. Maybe you trade in determination conditions and you tend to lose a lot. If you use this spreadsheet and every time you take a trade, you get it into that spreadsheet and you write how you felt and whether or not you followed your rules and what the result of the trade was. Jay, Ninja Trader 7 or 8? Do you have synthetics running on your Ninja Trader 8? Ooh, I got a lot of stuff open, don't I? Do you have synthetics running? So you see your 5-1s? Well, and that's why we're different. So the easiest way to go through and take a look at that is right-click and go Data Series. And then when that comes up, tick Replay. You can mark that. That's the first way to fix it, to make sure that you have that 21.3 fib that you're probably not seeing, that 5.1 fib that you're probably not seeing. And the other thing that you can do, and I think this is a great tool going into the weekend, is start fresh. And you can do that right now. Jay, you've been with us for a little bit. If you're comfortable with the process, just go to the resource page. Shut down your Ninja Trader 8 real quick. Go download the indicators, pull it back up, and then you're going to look at, it's going to give you the workspaces. But the Nexgen crude oil, the Nexgen mini S&P, these are 13.2s, 5.1s, set up and designed to be the most stable running that you can possibly have. And that's what I run here in the classroom. So either one works. You can put your tick data on and go, or you can start fresh and get that great brand new, head into next week with the best of the best. Does that help? I hope that helps. You're very welcome. And then remember, Jay, you can always go to Jason in Tech. If you need help, guys, if you feel like something's not right with your software or you're stuck, don't get frustrated. Jason over here in Tech is one of the smartest guys I know, and he will take great care of you. And then remember, if you're like, man, my computer's chugging, it's wheezing a little bit, remember that these guys put together the absolute best for you, and they knock $2,000 off the price for Nexgen users if you feel like it's time to update. So guys, recognizing patterns. So Jay, and that's where I would say go back. It's laptop, Jay Solar. That's where I would say shut down 8. Well, it's already shut down, right? Because it shut itself down. Here is your stability, Jay. So go through this process before you reopen. And then while it's shut down, Jay, go ahead and go to the resources page, and let's get just fresh run. Get those indicators. Let John Novak's workspaces be on there, the ones that he put together. And then open back up. And I'm telling you, the only time I have any challenges is when I start drawing too much. So anytime I draw something, I don't drag it, and I remove it after I've done it. And it tends to help me out quite a bit. No, you don't need to rebuild charts every day. So what you're doing every morning, Jay, that's a great question. And let's finish up the hour with that. Every morning, and this is the quick run. I'm going to NinjaTrader 8, and I'm going to database, and I'm highlighting cache and tick, and I'm deleting these two. Takes about 8 seconds. Then I go back to NinjaTrader 8, and I open up my temporary folder, and I delete everything in this folder, about another 8 seconds. And then I go to workspaces, and I delete the recovery folder, another 8 seconds. So I'm about 24 seconds in, and I've done the grunt of the work. Once I've done that, if you're using Norton Utilities, and I am, I'm coming through with my Norton Utilities. I'm bringing it up right now for you guys. And I'm making sure that I don't have any internet problems going on. It runs this, it goes through, says everything's all right. I'm coming to my toolbox, and I'm reclaiming my RAM, and I'm making sure that my memory is healthy and ready to go. And then I'm going to configuration, and I'm in ultra performance gaming, and this kind of puts my visual. This whole process takes me less than a minute after I've done it a couple times. And then once I've done that, then I'm opening 8 and I'm using those workspaces. So there's a little routine that I do every morning. And it really takes no time at all. When you look at it the first time, you're like, oh, what a pain in the ass. But the reality is it's not. It takes just a couple seconds. And then like Ron said, guys, we have high impact news coming in about 2 minutes. Here's your S&P. Let's see if it reacts. I'm going to take just a minute. I'm going to go reload my water and say good morning to my wife. When I come back, we're going to start looking at all the pictures that you guys have posted. Guys, if you're brand new in this room, and I know that there's a lot of you in here, and first of all, welcome. Welcome to being a part of what we do. Welcome to the education room. Do me a favor. If you have a question, post it in the room. If you have an observation, if you want a little clarity on something, post it in the room. Guys, this is your classroom. And it becomes an amazing environment the more you participate. Don't be shy. So post your pictures, ask your questions. I'll be back in just a second. And then let's see if the market reacts to that high impact news. I'll see you guys in about 5 minutes. All right, here we go into the second hour. You guys ready? Looks like we got a little bit of movement out of that news. Not a lot. Guys, price turned from nowhere. And look at that. 1, 2, 3 divergences. Right at that turning point. So far, what we're talking about works, right? Price pushes all the way down to the midband to support. None of the trigger lines break through. That should be enough to say, hey, don't do it. No short trades, even with that odds favorable momentum. Large triggers remained a full bar away when the midband was hit. Guys, this is what we call the gap theory. What's the gap theory? Gap theory tells us that if price reaches Fibonacci areas, whether it's support, resistance, a midband, and they remain a full bar away, price is likely to close the gap back to those triggers. This is your gap theory. This is an opportunity, if nothing else, to say don't try any short trades, at least until price pulls back and closes the gap to those triggers, guys. A little bit of a safeguard, not looking for a momentum style trade here, right? Not looking for a trend trade. I took a picture of this same phenomenon earlier today, allowing price to close the gap back to the triggers. It's not a trade setup, it's a patience piece. Trades in that vacuum where the market is being sucked back to the large triggers typically get run over. And that's actually your final termination condition when you're looking at, let me get to termination conditions. The final one on the list, a large sharp midband if the large triggers are a full bar away. And that was a picture of it happening live right in front of you. And guys, when the market doesn't make it to a key area, when you get that turn seemingly from nowhere, your midband and support near it become your first potential target. But the market becomes a huge fan of finishing that move up to your next key area, 41.91. Not guaranteed, but if nothing else, it keeps you on the correct side of things. It keeps you looking for things. It keeps you making sure that you're not taking shorts into areas likely to hold. But it's not necessarily an opportunity for long, as you see right now. You're still waiting for rules to be met. It becomes a patience piece. So guys, here comes the second half of class. The first half is us talking about rules, gauging advantages, understanding what we're looking at. And then the second half is me clicking on the links that you provide and looking at your charts. And Gary does one of the best picture-taking jobs that I've ever seen. He will identify termination conditions. He'll identify rules not being met. And all he's doing is he's using this picture in the moment as a patience piece, making sure that he's not breaking his rules each and every trade. Because guys, even if a trade's not happening, there's an opportunity for you to take a picture to make sure that you're being consistent with your thought process, with your trades. Safia, let's see what you did. So Safia says, I've got one of those 50-50 trades. I've got a pivot stop out, termination condition up top. Price pulls all the way back to resistance. The triggers stay down. Losing a little bit of momentum, giving up that momentum advantage, right, Safia? Price reach support, absolutely no trigger lines go through. Giving up that advantage of a clear path. So I don't have odds favorable. My smalls are inside of the large. I don't have a clear path. Price reach support, no trigger lines broke through. So should be a no. Should be a no. Giving up two advantages. But taking an entry right at an area inside of favorable large triggers. And you're able to take profits on the way down to that area likely to stop the market, giving away a lot of advantages here, Safia. I'm glad you were able to make money. Does that make sense? Do you see it? Smalls are inside. Cool. And I'm not saying that it's not a trade, right? So let's talk about what was given away, and then let's talk about the advantages that you had. You did have a beautiful termination, and that market is without a doubt going down from a termination condition. That's an advantage. Every indicator says down. That's an advantage. You have strong triggers with no divergence. That's an advantage. You have an area inside of favorable large triggers for entry. That's an advantage. You also have a high volume area and strong triggers. That's an advantage. So you're using chart reading to use your advantages to take a manageable trade. So I like it, and I think you managed it beautifully. Safia, did you not pull up 7? That's okay. Did you pull up 7 and then one chart on 8? Or are you still struggling with 8? And has Jason looked at your computer? Is your computer newer? Is it older? Does it have the memory? Does it have the video card? All the things that 8 requires? It was work. All right. New laptop. Guys, there's I'm going to give you guys this link. John sent me this one. Doesn't cost anything, doesn't put anything on your computer. See what your computer says. I've got the download. For me, it was kind of eye-opening. Because when I did the user benchmark test, it told me that my graphics card was garbage. And it told me that my computer wasn't quite as cool as I thought it was, to be honest with you. And then I compared it to John's supercomputer that he uses, and it was pretty amazing what his did. Yeah, I was tree trunk, Bobby, completely. And Bobby, did you get one of those easy trading computers? Yeah, give it a try, Safia. See what it says. And then Bobby said he went to UFO with one of these. This is on my list of things to get. I'm not having the same problems, but I will ultimately upgrade to one of these. And they're giving a pretty great deal for next-gen users, and they're putting a lot of upgrades. Yes, George T., the contracts do roll automatically in NinjaTrader 8. It should give you a little pop-up. You're welcome. And it'll tell you. And then, Safia, we talked yesterday about you using 7 and then one chart for entry. Guys, that's an option. If 8's giving you fits, Thala, Safia, if 8's giving you fits and you have a license for NinjaTrader, you can go back to 7. That's an option. I use 7 for all of my analysis. I use 8 for my entries, but I do use 8 for class. So there's options beyond being stuck on 8, without a doubt. And guys, I like to say this every time because I think it's important. The coding is the same. There's no difference between NinjaTrader 8 Next-Gen software and NinjaTrader 7 Next-Gen software. It's NinjaTrader 8 has higher requirements, I think is the best way to put it. All right, so let's keep going. And guys, we'll talk about all of this, right? We'll talk about all of these things. And then Jay Solar, that's that same picture I showed you, which I think is great that you did it as well. There was the gap between price and the 13.2, right? So Safia, and I remember I'll never tell you guys what to do with your money. If you're having computer issues that are making your trades unmanageable, make sure that you're on simulator while you work through that. if you feel that's your best option. I don't suppose I would put real money on the line if I didn't trust the equipment. So Jay Solar, you take the first one and get stopped out because of the gap, and then you let it close the gap, and things kind of work out. Jay Solar, nice trade. Using that gap theory to your advantage. And let's see, who's next? Bobby T. Bobby T. Bobby T went long directly into a termination condition. Not an area inside of favorable large triggers. You say it's 50-50, no divergence. There's your best entry right there, right? And then you're still out inside. Here's your entry, Bobby. I don't hate this trade. They do, Tony, 90%. 90% off your first month and 80% off your resets. Bobby, let's walk through this one together. And man, I'll tell you what. Bobby, you don't get to yell at you. Only I get to yell at you. All right? Did you have odds favorable? Yeah, you did. It's a 50-50. And you had no divergence. And here's your window of opportunity right there, isn't it? So yeah, if you're in at the window, it never gets below those large triggers, and you're in this trade for the run, even if you move your stop behind the reversal bar. But at this point, you already had your risk established. You panicked because you got in late, right? You had that, oh, crap. And because you were focused on getting in late, you forgot about everything that said that you were totally cool over here. And this is why great entries, guys, they create manageable trades. But either way, the rules are still met. You still have established risk. But be careful. I'm going to go all touchy-feely for a second. Be careful with this. Because if I called you an idiot, you'd call me an asshole, right? You probably wouldn't come back to my class. I can't believe Mark just called me that. Well, okay, you might not because you know that I'm not going to do that to you. Guys, be careful when you talk to yourselves. Accentuate the positives. This is a great trade. It's just a wrong entry. And now we can go back and study this picture, right? We can go back and study the picture. Asshole. I guess so. You know what? If we're hanging out, drinking a beer, I'll call you an idiot. I'll pick on you. But this is a great picture on so many levels. But the biggest thing is that it was a rules-based trade, right? It was a great trade. It was a 50-50 with no divergence and strong triggers and a little window of opportunity. And it's easy to lose sight, right? Yeah, it is. J Solar, 90%. And then 80% on all resets. Guys, that's amazing. That's like $20 to handle $50,000 worth of money. Everything says this is a great trade. And then it's that one little slip up. Have we reached it, Rain? Because remember the recipe for a termination condition? Price reaches. Where are triggers? Almost? No. Price reaches. Where are the triggers? You know what? When I was 22, I dated this girl. She was beautiful. And I almost kissed her at the doorstep. Almost. Couldn't brag to my friends one bit because I didn't actually, right? Almost. Price reaches an area where the triggers, and it almost seems too simple, right? They do, Miel, every day. Because they want to get you guys in and making money because they make money. So since we haven't reached it, it's not in my equation yet. Does that make sense, Rain? And it's not small triggers at, it's price reaches, then where are the triggers? And if you reverse that, it's gonna change a lot for you, isn't it? Because here, price reached, but the small triggers hadn't made it. That's a termination. But until price reaches. So maybe that'll help you a little bit. Maybe that'll get you in a couple more trades. And then let me show you something cool. Watch this. So let me give you the second half of that one. Let me blow up his picture just a little bit. And I'm going to show you something pretty amazing. So, and this got me when I was brand new, and maybe this gets you guys. So I'm almost to the area, right? And that box represents room to the target. My entry is here, isn't it? So that represents room to the target. When price reaches this area, then I have to think about it a little bit more. But remember that because we're trading the pullbacks, that 4 or 5 ticks to the area suddenly becomes 25 ticks. Does that make sense? It's almost there, but it's not. So if everything lines up, the rates, yeah. So you know where your potential target is though, right? That's what we're using this for. This isn't a, hey, it might stop the market. This is, man, this is where the market might go. And now we can use that because of momentum, because of everything going, because of our great entries, we can identify where the market is likely to go. Thank you for saying that, because I think that brought about a great opportunity. And Bobby T, remember, 13.2 leads the way. And all this did for you is it cost you a couple ticks, but you had already established your risk, which is kind of a great thing going into a trade, right? And then J Solar, not in an area, right? Man, it's so close. It's hard to see this one sometimes. You go, why didn't I get in? Well, because your rules weren't met. And that's okay. And you have to be okay missing stuff every now and then, because it's not your money if your rules aren't met, is the easiest way to look at it. Gary, weak triggers at a 50-50 with multiple divergences. Whew, that's ugly, isn't it? Great picture. And great job following the checklist. Guys, put your checklist on your chart. And then Ron, everything says up with a clear path, quick entry, quick exit. Black arrows don't mean nothing, just wanted to look like Zora. Guys, this is using the software, creating a look that makes you comfortable. Ron takes a different style trade, but it revolves around odds favorable momentum and a clear path. And rather than trading pullbacks and stuff like that, he's taken a little piece out of the puzzle, 8 to 10 ticks, and getting paid like this 10 to 15 times a day. Ron, I sent you a message asking a question. You have a message from me about your trade. I've been studying it. I like it. I think it's a great trade. And then Gary, 50-50. Did you get tapped and not filled, or did you do that too late? By the time you get in, it's a runner. Exactly. Not filled. Bummer. It happens sometimes, right? Jose, are you asking about Jay Solar's picture? Is it okay to use market flow in that situation? Sorry, guys, I scroll back and forth like this, going to your pictures and then back down to comments. So if I miss one, I'll come back to it. Jay Solar, I believe the pictures were the same. Let me double check. I may have messed something up. So, guys, we're going to reverse to Jay's real quick. So there was the first picture. As it turned out, the market took off following trend. It certainly did. The next one is what happened a few minutes later. It's the same picture is what I'm seeing. Am I missing something? And then Jose asking if you could use market flow in this situation, right? Are your rules met? Let that be the first question. Are your rules met? I'm gonna Sunday school this one. Do you have odds favorable, no terminate, except for the area they are? So doesn't that translate into, I will, Jay Solar, just a second. But doesn't that translate into no, the rules aren't met? If you say except for, and then going through once again, a market flow signal, when the rules are true, Jose. Because what's going to happen is if you start chasing arrows in space, life becomes difficult. So when you're using the market flow, guys, Jose, there was absolutely no reason to think that it was going to go from here with a mid-band there. It's just rules not met. No trades here, only questions. Anything can happen, right? But a clear path, good trend. Small's still above. Retracement has begun. Where do you get in here? At an area inside of favorable large triggers. So, Jay, what you're asking me is how do I break my rules, right? What you're asking me right now is, hey, Mark, my rules aren't met. I don't have an area inside of favorable large triggers. I don't have my rules met. How do I break them so that I don't miss this? Jay Solar, you have to write new rules. If you want to take that trade, you have to write rules for it. But what I'm going to suggest is that your rules are repeatable, that you can backtest them, that they're duplicatable, and that you go find 100 pictures of this and find a condition that gives you a feeling that it wins more than it loses. Does that make sense? Guys, don't ask me how to break your rules. If you keep seeing a pattern that works over and over and over again, create rules for it. Ron did. Ron probably got in here and got out here, right? But I'm going to tell you, without an area inside of favorable large triggers, and I saw the follow-up. So Jay Solar, what if you did the same thing right here and got crushed, right? What if you did the same thing here and got crushed? What if you did the same thing? So it's easy to say based on one movement. But Mark, look at all the money I missed. But how often does it repeat itself? Jay Solar, you're missing my point. My point is that if you're going to ask me how to break the rules, I'm going to tell you to write new rules. Does that make sense? I'm not going to write a trading plan for you based on jumping into the market. So, Jay Solar, my advice to you, if you really think that this happens so much that you're missing out on some stuff, is when the market is absolutely cranking, when there's 100% clear path, how often does it continue from the bottom of the large triggers? Right? That may be a great starting point. And go find 100 pictures. But you notice that you also had divergence in the small triggers inside, which suggests a loss of momentum, which would actually lend a little credence that it may push lower to one of those areas. So maybe with no divergence and the small triggers outside, how many times does it happen? And I love that you guys are curious and looking for opportunities, but it's important to remember that if the market goes without you, it doesn't always mean that there's an entry. Sometimes it's just not your money, right? Sometimes you just have to watch it go and go, son of a gun, I'll wait for the next one. I think they're great questions and I think they're great observations. But anything and everything, I think, has to be repeatable. So, compounding a little bit with what Jose said, is let's find it. It was somewhere over here, right? Where was that little bounce? Well, that was a perfect trend trade. Hope you guys got that one. And I think this was the next one, right? That's the one that was in question, Jay Solar? Divergence, loss of momentum. So it only went a fraction above and then cratered. If I'm looking at the same one. Jose, what did your market flow tell you here? Didn't really give you anything, right? By the time you got any sort of confirmation, it was already pulling back against you. 3 divergences in the same location. So when you go back and look at this one, it really didn't do much, did it? The 5-1 started telling the picture. I'm not sure that this is, and that may not be the right one. 5 days, Gary. So that's what I do when I'm looking to add a trade. It was that, yeah, and it may be, it might have been a different one that I was looking at. You're right here, 41.58. Nope, so it was much lower, I think. I'm not sure. But I guess all that I'm saying here is let's find a way to make it duplicatable. And that's through that repetition. And yeah, feel free to post the picture there, Jose. Guys, I embrace 100% and endorse you guys looking for trades that make you happy. But look for trades that are high probability. Look for trades that are repeatable. Look for trades that can be tested rather than trying to create a plan because you feel like you missed out. And Gary, we saw that one. Bronzy, we saw yours. Gary, missed you by a tick. And then Safia. Beautiful. Everything about this is beautiful, Safia. Every advantage. That's the one, isn't it, guys? 41.75 to 77.50. 2.5 points plus another 5 points. And that's a 4 lot, right? So that's $300 plus another 200. It's about a $500 trade, isn't it? 525. Why are you guys looking for so much stuff? Why are you guys trying so damn hard to catch every move in the market? You ever ask yourself that? Safia, how often does a trade that looks like this? I would say this 50-50 sets up, what, 2 to 3 times a day, typically? On a bad day, 2 or 3 times? Coupled with a high probability trend trade, 2 to 3 times a day? Is there any reason to fight trends? Is there any reason to take these maybe trades? And that's kind of where I'm getting at. Safia, this is beautiful and it's effortless and it's low risk and it's easy money. I love everything about this trade. And I think that my point there, guys, is that I've never had anybody in the history of the high probability trend trade follow this checklist 100% and do worse than 70 or 80% winners. And your heart didn't race. I love that. But because we're humans, Dimitri, no, I liked your first spelling better. But because we're humans, we get bored. We want more. The same reason nations went to war. Rome tried to take over the whole world because they weren't happy with what they had, even though they had so much. Find a way to take the best trades and just add contracts, right? So, Sophia, your trade on a 10 lot is a lot of money. Your trade on a 100 lot is a lot of money, but this trade's effortless. At the beginning of 2022, everyone came storming into the room. Better trades, more contracts. Fewer trades, more contracts. And that's kind of where I'm going with this one. Yeah, because it's perfect, right? So how much of that $525 are you going to give back fighting the trend? How much of that $525 are you going to give back trading into termination conditions? None. Perfect answer. But don't we do that? As humans, we take the perfect trades and we make the perfect amount of money, and then we give it back because we're not satisfied and we have to get more. So I think that it's a good lesson and something to think about is don't make your winners work so hard to take out the losers, right? To change the result of a poor trade. Let those winners be winners. Let that money work. Stuff to think about, guys. Everybody's different. Everybody has a different approach. Everybody has a different feeling. Everybody can identify termination conditions, right? Great job, termination conditions. Just a picture that says my rules aren't met. I'm going to sit on my hands. Scrolling through, looking at pictures. Tony the Tiger. Let's see what we have. You had a good top. You have a termination condition that creates a full reversal. You have a full reversal that slams you right into two areas of support with no trigger lines through and a midband. Not even a 50-50, right, Tony? Really not even a 50-50. That's termination conditions for days. But because of that pivot stop out at resistance, everything below, you're saying, man, I'll take a shot. You take it low and it closes the gap right to those triggers, right? Just like it should with that gap theory. I like that entry better, even though it doesn't have an area. And then not hoping that all of these areas break, so you manage it quickly. Tony, I think if you're going to take this trade, I think you did it right. You got in at the first spot. You kept your stop where the market shouldn't go as it closed back, and then you managed it aggressively because you had termination conditions for days, right? Great job, Tony. But that termination condition that creates a full reversal sets the tone, doesn't it? And Mike W., 10 lot, fewer trades. I love that. All right, Gary. No trade till the triggers roll. Not the greatest looking HVA though, right? Trigger lines going through. The large are still below all the areas, and you're coming right off of resistance. Is this yesterday or today? Because there was the exact same look yesterday. Let those triggers roll. If it's going to be a bottom, it'll roll, right? Thala, 50-50, divergence. And then once again, Thala, remember we talked about this earlier too. When we're not coming from a great area, that 50-50 trade right at the midband is less likely to work, right? Do you remember that lesson? If it's not a strong bottom, and then you gave away because of that divergence, right? And then that second lower divergence said, all right, we're done. And look at the distance between the top of the triggers to the bottom of the triggers. Like it. Stop should have been right below the reversal bar. I think it's a good effort. I think remembering that when it's not coming from a strong bottom, you reduce the likelihood just a little bit there. J Solar. Oh, that's the one that we looked at. Yuri, good morning. I bet I know what Yuri did. Strong triggers, made it through the area, taking that momentum style entry, right? Quick profits, looking for the next area. And then Yuri, the same thing here. Those large triggers were way up there at the one-to-ones. You did a great job keeping your stop where the market shouldn't go. But remember that this is a momentum style entry, Yuri. When you're taking that, well, no, it's just you had a reversal bar, Thala. I never move stops arbitrarily. I always have a reason. Always have a reason. My stops go where the market shouldn't go. Initially, Yuri's is a great example. The market shouldn't go above these large triggers. There's a lot of risk. And then once that reversal bar prints, the stop gets put above the reversal bar. He's holding this one, so when the second reversal bar printed, he probably put a stop above that, took profits at the trouble spot, and then momentumed in. So when we look at yours, Thala, which one am I stating as the reversal bar? The reversal bar. That's your reversal bar up, isn't it? You're in the trade? So your initial stop, let's do the stop on this one, because I think this is a good management plan, right? Your initial stop has to go all the way down here where you had it, below that window. Agreed? Makes sense. You nailed it. But when you get that reversal bar, reduce your risk. It's telling you, all right, we've hit that area where it's likely to continue. Here we go. So you turn this 28 stop into a 28.8, and on a 2 lot, that's 160 bucks. After the reversal bar, have a reason. Cool. And guys, this is why we post pictures in the room. There's a conversation about everything. There really is. Wouldn't that be awesome to only take a 10-tick loss instead of a 20-tick loss? Great picture. And then who's next? Bobby T. Bobby T says, everything says down, so let me get in at resistance inside of favorable large triggers and let me make money right down here. How could you go wrong? Bobby T, that is karma getting you back because you talked yourself out of that other trade that was such a great trade. Beautiful. I love everything about that, man. Nice job. And look at this. Good top? Yeah. Odds favorable? Sure. No terminations? You betcha. Area for entry? Yup. 50-50? Nope. That's your first trade? That's a hell of a first trade, Bobby. Nice job. Does anyone have a question about Bobby's trade? Because this is the kind of trade, guys, that I'm going to steal. And I'm going to open up my spreadsheet. And I'm going to put it in my spreadsheet so that I can do what Bobby did. What made you decide to trade silver? Why is the 1-to-1 not a termination condition on that trade? Let's find out. Let's find out, Jay. I love it when you guys ask questions about other people's charts. These 1-to-1s right here, Jay? And this goes back to trigger line location. The small triggers are through. The large triggers are not. So Jay, what he's looking at here is a 50-50. And let me pull up the picture for it. Actually, you know what? Let me go to my entries. What he's looking at here is an area with the potential to break. So when the small triggers break through with that odds favorable momentum, the large triggers don't. 25.94 happened right here. It is a termination condition, isn't it? I was looking down here. Without a doubt. Price reaches support. None of the trigger lines break through. Jay, you're right. It's a termination condition. What made Bobby want to take it? So let's go to the second half of it. Jay, great catch. Termination condition creates a full reversal. That's a good one. Sorry, Bobby, have to check. No. Guys, excuse me just 1 second. I'll be right back, and we're going to get back into this one. All right, guys, sorry about that. Rule number 1, always say goodbye to your wife. So, Jay, this is a great example of gauging advantages, right? Termination creates a full reversal. Full reversal gives odds favorable momentum. So, great, we're down, there's momentum. Everything says down. His window of opportunity is that big. And even more importantly, I think I like this, is his range chart is saying go, 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 go with odds favorable as well. So in the bar fight of life, Jay, it's 10-1. And I think because of the great termination condition, because of the strength of the 5-1, because of the tiny little window of opportunity, and because of that much momentum, you can make a calculated decision to fight this area with all that momentum. And just, if nothing else, hoping for a retest and then gauging it when it gets there. Does that make sense, Jay? Not even a 50-50. And Bobby, I think that what Jay was saying and what I actually agree with and why I went through advantages over is at the time of that trade, you are trading into 1-to-1s that haven't broken with the triggers yet. No, Jay, you don't at all. What you need to do, Jay, is you have to ask yourself, am I willing to take this trade? For me as a brand new user, Jay, for somebody that has an affection, does that make sense? And Bobby, I'm not knocking what you did. It's a great result, right? It's a great result. But here's the flip side. That one would have lost, right? This one would have lost. That one would have lost. That one would have lost. That one would have lost. Your market flow said go. So you made a calculated decision, a pragmatic choice based on indicators to take a trade where you gave away the advantage of a clear path. One issue existed, and you chose to trade into it. I love it, Bobby. That's the difference between the people that are learning to read their charts and the people that are chart readers. And the goal, remember guys, the goal is to be a chart reader. Because when you can understand where the market is likely to continue, where it's likely to go, and where it's likely to stop, your plan is going to grow. So J100, your plan may grow, but I wouldn't modify rules until you're so comfortable with the concepts that you feel comfortable and confident making a decision like that. Does that make sense? My plan, Jay, and I've been with the software quite a while, and I teach you guys every day. I don't trade in termination conditions. I just don't do it because I suck at it. True story. I'm not good at it, and I don't know why. I'm great at reading the software, but I lose more than I win trading in termination conditions. So I've made the choice to not do it. Bobby, that was a great picture with some great lessons, man. Thank you. Dimitri, strong top. Yep, termination creates a full reversal. Here's your 13-2. Let me see where you got in here. I love this one, Dimitri. I say love a lot, right? I guess that's good. I'm kind of a hippie. 13, he's using the 21. So what does the 13-2 say? It says the triggers tried to break through. It's not the best termination condition. Price pulls all the way to resistance. Trigger lines don't follow. Everything gets below 66. Doesn't have odds favorable, but he definitely has a clear path. And then Dimitri, you take the pullback. Nope, that doesn't make sense. That's 86. You're up top. I thought this was at the bottom. So you're all the way up here at 88. And you're using the 21 as a great termination. And you're using the pullback to the large on the gap theory. And you're using a pivot stop out after 3 divergences. So Jay Solar, remember when we talked about a great termination condition can set the tone? This is kind of one of those instances, right? It is. And Andy, it's just a chart reading, right? So he's incorporated a higher time frame. A termination condition is still a termination condition. And then like the 5-1 with 3 divergences kind of validates the termination condition on the 13-2. So he has a termination condition, and then he has divergence. And he has 3 divergences in the same location. And he gets a full reversal, but the gap theory pulls him right back to those trigger lines. And it happens to be a pivot stop out right at everything rolling over here. Gosh, that's a beautiful read. But there's more to it than a simple high probability trend trade, right? Dimitri, what a great trade. So this is where we're headed, right? Learning to read the charts and then creating a plan based on our ability to do so, guys. The only reason that I talk about the high probability trend trade like it's going out of style is because once you learn to recognize advantages, you can build your plan to anything you want it to be. You need to write rules for it, and it needs to be repeatable so that you can backtest it. Does that make sense? Dimitri, how many times did you see 21-3 termination conditions with multiple divergences and pivot stop outs on the 5-1 before you incorporated this into your plan? Hopefully a lot, right? Hopefully there was some study that went into this. But that's how you develop a plan, guys. And it all comes from the foundation. It all comes from momentum, clear path, entry area, and using these concepts of termination conditions, of trigger line location, right? Of entry points to create a plan that suits your needs. That's not my trade. But do you see how I was able to know exactly what Dimitri was doing? Because I can read my charts. And guys, if you take this picture, steal it and call it chart reading. And look at everything that he recognized and know that there's a lot of opportunity for you. The more you grow, the more opportunity becomes. And then Jose, I think this is it. So you took the entry, right? No, this was the same one. It's a market flow signal, but it's not a rules-based trade. You took the market flow signal. And then the information on these two charts. Jose, this is the dang it, it's going without me. How do I find a way to get paid even though my rules aren't met trade? Would you agree? And that's okay. Everybody's brain's going to think about it. But let's analyze it a little bit more. And I don't know why, but yours look different, Jay Solar. Anything can happen triggers. Divergence with anything can happen triggers, right? You had a down bar and a down bar, and the triggers are returning. And you're just kind of hoping that this one little reversal bar gets you to the next fib. But the chart reading says you're losing momentum. And what happens is the chart reading was right. And this is why I don't chase trades that don't fit rules. My area is already outside. And if you go back and study weak triggers and areas outside, they lose more than they win. So I think it's a great look. It's a great opportunity. I think you wasted commissions hoping that weak triggers would get you to the next area. But I am happy to see that you got out of that one break even. You didn't hope. Does that make sense? And guys, sometimes I'm going to tell you stuff that you don't want to hear. No hope, just make it your trade, right? 50-50, no divergence, strong triggers, tiny window of opportunity. Just make it happen. I agree, Joel. And guys, if you miss one, take the picture, right? Hindsight provides great study. Yes, it does. Absolutely, it does. And then that's true on a couple levels, right? Hindsight creates great study. I guarantee when this trade was taken, everything in Jose's body said, well, everything says up, and I just want to get into that trade. But once you take a deep breath and the trade is over and you go through and you really analyze what the indicators are saying, you may have a different perspective. Guys, this is why I study everything I do before I do it again. Tony the Tiger, directly into a termination condition, resistance mid-band, large triggers are a full bar away, and you take the trade. And this is an edge trade, right, Tony? But could we start about what, and you've got the most important piece of this one. You've got the most important piece of this trade all squished up. You had a termination that created a full reversal that gave you odds favorable with no termination conditions. And your 21-3 with odds favorable momentum pulled right back to an area that on that super high time frame is likely to hold. Likely to stop that market in its tracks because of momentum, because of trigger line location, which had you looking to the 13-2, which is at that exact same area. And now there's that gap theory. And Tony, not a home run trade, right? Because you just had a pivot stop out at support. You had a great termination condition here. So you take, this area is likely to cause a bounce. And where is it likely to bounce to? Right back to the mid-band and large triggers. It's an aggressive trade. It fights trend. It fights momentum. But it's got a shot of pulling back to that area based on some great chart reading. Nice trade. I think that the execution was perfect. And I think that it's the 21. I don't even think. I know. It's the 21 that made this one doable. Without this look on the 21, that's a butt kicking waiting to happen. Nice trade, Tony. So there's that pivot stop out all the way up to the area. Market pulls down all the way to that pivot stop at one more time. No trigger lines through support still, which means that we're rock solid termination condition right here at 57.50, which means that if you're in at 59.18, you are breaking some rules. I hope it works out for you guys. And then termination, 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 termination. What do you think? Would it be advantageous to let those crude fellas get out of this range? I feel like it would be. Guys, great pictures today. Great chart reading. Great opportunities for education. I'm going to take a few minutes. I'm going to go run a lap, stretch my legs, drink some water, pop my back, all those fun things. When I come back, last hour belongs to you guys. I want you guys to take this last hour, pick a concept that you want to talk about. If you want to talk about entries, let's talk about entries. If you want to talk about termination conditions, strong tops and bottoms, let me know. We'll go through it. If you want to talk about locating the window of opportunity, absolutely. I'd love to do that. Post your questions, post your pictures. When I come back, we're going to finish strong, guys. End of the week. I'll be back in a minute. Joel, you want to talk about good tops and bottoms? I love that. What a great thing to talk about. So let's use what's happening right now in crude oil. What do you guys think? Good top? What defines... Thala, you say yes. Dimitri, you say yes. Okay. So I'm going to write out a definition. Guys, I'm a big fan of definitions. And I think words really are pretty powerful. It's the English lit major in me. You ready? A good top or bottom is a termination condition that causes a full reversal. Tony, I'm with you. Large triggers are still up, ladies and gentlemen. And because the large triggers are still up, we don't have a full reversal. We've changed trend, but a full reversal means that... Tony, take care. Enjoy your weekend. A full reversal means that those large triggers go from red to green or from green to red. They are. Thala, we have a downtrend, don't we? So when those small triggers cross below the large, the background painted red. But guys, this isn't... Nope, it doesn't. So, great question, Thala. So let's go back to termination conditions, and let me show you what I mean. It is. So this creates the difference in trend, right? Those small triggers. When we talk about a full reversal, let me go to termination conditions. The large triggers can still be down. The small triggers can be above. And it's going to paint that background green, right? At least it's telling you. Yeah. So it's telling you right here, man, don't look for shorts. We're getting some changes happening. Don't do it. But you still have to have the rules met. It's when the large triggers, when that slow-moving indicator goes from red to green. And now see how everything matches, Thala? That's that full reversal. Now we're defined as a strong bottom, as a good bottom. We do have the termination, right? We do get the trend change, but it's when everything goes green. That's when we have the full reversal. So right now, we definitely have termination conditions up top, right? But don't we also have a termination condition at 82.23? That was back here. It's done some stuff since then, which works out great, right? Because look what happened. We never got a full reversal, did we? Pretty cool. So we're not looking for those shorts yet. And what are we seeing now? We're seeing consolidation, and now we're looking at a potential breakout, right? Those small trigger lines are starting to get up there. So Joel, does that help a little bit? Because I think that's the part of the definition for a strong top. Dimitri, does that help a little bit? Gary, does that help a little bit? Which trend trade did you take, Thala? Show me the picture. Because I don't see one in there. And we still don't have any trigger lines through this 8242 area yet, do we? And this is the S&P. Whoops. Here we had a termination condition. Joel doesn't create the full reversal. Then we get another termination condition, comes back and retests, and we actually do get the full reversal, don't we? So this termination condition that creates the full reversal works like a champ all the way up to the next termination condition. And then the market comes down, and now it's just messing around. So one of the key concepts is letting those trigger lines roll 100%. That's when you've got the full reversal. So Thala, what kind of trade is this? That's knowing what you know, you're not proud of that trade. I like it. Yeah, that's and Thala, you're not running any of your synthetics, right? You were hoping rather than going by the rule. Sometimes just that recognition is pretty awesome, isn't it? What may break, Joel? This may break? Or that may break? It may break. You're absolutely right, it may. Or it may not, right? So Joel, what you're doing is you're playing if-then. And I love playing if-then. If these trigger lines get above this area, if I get odds favorable momentum, if I get a pullback to an area of support inside of favorable large triggers, then I'll take a trade. If this market decides to roll, if these triggers roll, if these areas break, if I get odds favorable momentum, then I'll look. So it's a hurry up and wait, isn't it? 13.2, Jay. I don't have time to wait for full reversals on the 21. That's a big chart. So guys, consolidation, bing, bang, boom, bong. Then we get the breakout. And now if we get those trigger lines up above, right, it's game on to the upside. Price reaches resistance, trigger lines don't break through. Every chart says up. We're just waiting for that clear path, waiting for an advantage to the upside. But I think that this is the best lesson. It might not. Show me a picture. Might give a good entry, possibly. Are you saying that rules are almost met? Because remember, if you keep it simple, rules met, rules not, it takes a lot of the headaches out of life, guys. It really, really does, I promise. So if then, once again, right, if the smalls get above the area, well, then I can look for one of those 50-50 trades. But until these smalls break, I'm in a holding pattern. If I'm a high probability trend trade user, if my plan says don't trade into termination conditions, now I've got smalls above, large below, odds favorable. I haven't reached the next key area. Do you see how we're doing it now? And now, if I get a reversal bar, oh, my chart trader's not on. Now, if I get a reversal bar, this is my highest point of support inside of favorable large triggers. Do you see it? Smalls above, large below. If I get a reversal bar, this is my highest point inside of favorable large triggers. 82.47 is my lowest point. It's a medium probability trade because I don't have the clear path yet. Whoops. But that's how quickly your analysis is going to happen, guys. You'll begin to gauge advantages almost instantaneously. If I take more than 3 to 5 seconds to determine whether or not my rules are met, it's probably not a trade. Same look, right? 50-50. You've already had one divergence, Thala. Where's the market coming from? Is it coming from nowhere, or is it coming from a great termination condition that created a full reversal? Doesn't that affect the quality of a 50-50? And then doesn't a divergence affect the quality of a 50-50? It doesn't mean that it won't work, but this is a 50-50 with less chances of survival because you've already determined that you're not coming from a good termination condition. You don't have a clear path, and now you're starting to lose momentum, and it looks like you may even get a second, right? So keep an eye on it. Keep an eye on it, but what are the advantages? Strong triggers, right? Strong triggers. Little window of opportunity, strong triggers. Keep us posted on how that one shakes out. So Joel, did that help a little bit? Termination that creates a full reversal. Oh my gosh, all we had to do was turn our head for a second, right guys? Should have left my order there and put it on my account. Did it fit the rules? What do you think? Who got that one? Who took that trade? Who said I like the advantages here? And I'm taking that trade. Anybody? Ready to shoot yourself? Oh, Gary? Termination condition. That's not a 50-50. That's a termination. Right, Gary? Divergence low, no triggers through. No matter how pretty this is here, you traded directly into an area likely to stop the market. Yeah, I think you were just waiting. You just kept waiting. And man, there, look at that. That's ugly, isn't it? Everything but rule number 2 met, Gary. I'm sorry you had a rough day. It's going to happen from time to time. Take a deep breath. Go back and look at everything that you did today and look for common themes. What made it difficult? What didn't? What worked and what didn't? Look at that. Now you have a clear path, Thala. Don't you? Clear path, odds favorable, area of support inside of favorable large triggers, and you said, give me my money. Thala, beautiful trade. You know what? Where's my spreadsheet? I'm stealing that one. I want to be able to do what you just did. There we go. So now if I need to teach a class, or if I get hit by a bus and somebody needs to go, man, what's the perfect trend trade long? Well, Thala was nice enough to help out. And that's it, guys. That's everything that we look for. 100% checklist. Great job. Jay, I don't know how many versions there are. I use Norton Utilities. That's what it says. And that's good. Stable for the last few days. Mine's been good. It's random. Let me see if I can find my... Mine just says Norton Utilities, Jay. I don't know if there's another version that goes with it. I'm not even sure. Oh, I don't know. Let's see. Maybe I can recognize it. If I had to guess, I have Ultimate because that's just kind of what I do when I make a decision to get something that I feel like I need to have. I prefer to have what's going to give me the most, or what I perceive will give me the most. Let me see if I open up my utilities, if it says on the utilities. Oh, I've got premium. There we go. So I'm running premium, Jay. There you go. You're welcome. And check it out, guys. Straight to resistance, right? That's it. That's your plan every day. So let's go through. It's Friday, so let's talk about this. Especially with what Apex is doing. Let's talk about this. And guys, I want to invite you right now, if you're new in this classroom, or if you're working your way through getting to where you want to be, if you think you've got this thing nailed, but you're not 100% sure about a look, I want you to do me a favor and ask a question. I don't care if you've been with Nexgen for a day or you've been with us for 10 years. If there's something that you need help with, that's what this classroom is designed for. So don't be afraid to ask a question. Raise your hand. Guys, John Novak and I got together and we created What's the Path? And guys, when I talk about taking a path, there's a couple different types of traders. We have brand new traders in here. We have people that have never done anything in the market, right? That was me when I began trading. It bugged me to no end that my brother said, well, just sell. Well, how can I sell something I don't own? And we went round and round for a month. It felt like an algebraic word equation, which is my Achilles heel. So John and I got together about a month ago, one Sunday morning, and this is what we do, guys. We wake up and market replay. We go back and practice on the weekends. We share pictures with each other. We talk about the way education went for the week. We talk about the questions that you guys have and whether or not these concepts need to be included into the education material. We talk very much about... Actually, we talk about you guys. We talk about your successes because we get excited about them. We talk about the things that we can do to make it better. And our conversation resulted in this. And this is, in my opinion, about the most complete idea of a path. Whether you're brand new, whether you've been with us, guys, I have traders that have been with Nexgen for 5 or 6 years. And they come back and they say, Mark, you know what? I've tried to do it my way. I need to refocus a little bit. I need to simplify so that I can be profitable, and then I'll grow my plan from there. And you see that a lot. But to minimize your learning curve, post pictures of your trades in class. That is the first thing when you talk about the education plan. Post your trades in class. Every trade, win, lose, or draw. When you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How will you know the difference? Guys, you probably won't as a new user. To be sure, you need feedback from us, and we're here to help. If you place a trade on the simulator, you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, And that's the educational magic that we offer, guys. Is there a way to predict divergence? Is there a way to add lines to predict them? Jay Solar, you could run MACD-BBs on it, and you could start doing the math and looking at the equations before they actually print. But what you can do is watch this. Right now, I have the potential for divergence up on the 5-1. I have the potential for divergence down. So I don't know if it's going to happen, but I know that the potential's there, right? So I can use that sometimes, Jay Solar. Let's say I'm in a trade. And I like that question very much. If I'm in a short trade and I've already had 2 divergences and the market's right here and I see that potential for a third, it gives me the opportunity to be prepared and able that if that divergence is true, get out of the trade when it prints. Like I'm prepared and I'm ready for it. But the problem that new users have is there may have been potential divergence all the way up to your profit target. So the difference between trading potential and actual can mean the difference between exiting a trade prematurely and holding it to the profit targets. But if you go, and I don't even know if they're in the indicators here. Let me see if I can add MACD BB lines. And hopefully I don't crash my system doing this. Are you comfortable with MACDs, Jay Solar? Because I like the question very much. Let me give you this picture, and this is straight from the glossary of terms, common terms. In order for you to do this yourself, you still need a pivot. So you might be able to predict it a bar or two ahead, but all it is you're getting a down move here, and your MACDs are showing you a divergence between the two, right? The market's moving up. This retracement on your MACD is much smaller than the retracement here. So you've got to go through and be able to do the math and look at the retracements and figure all of that stuff out to predict divergence. But it still has to happen. You still have to wait for that second BB. And when that second BB happens off of that pivot, Jay Solar, you're about on the third bar here, and that divergence is printing. So I don't think that you can do it any faster than your software already does it, right? Because by the time it's true, by the time you have enough information for it to be true, your software's already printed it out. Your software's already told you that divergence is true. Does that make sense? And there may be an even more technical way to look at it, and that one I would have to leave for John Novak, because I'm not so much a tech guy. I am unbelievably thankful that I don't have to do this equation. So, but that's it right there. That picture shows you what you're looking for. It tells you exactly what happens and what you're doing. But I think that having that recognition of the potential, knowing that there's a potential second divergence, let's say hypothetically I'm long, and I'm saying 2 divergences at this area will take me out of a trade. If I put a stop, well, there it goes, 2 ticks behind the reversal bar, when this divergence is true, I can anticipate and be out right when it's true. So that's how that potential helps a little bit. Hope that was helpful. Guys, post everything, right? Keep asking those questions the same way you guys are doing it today. And use this outline for education. There's a step-by-step path, right? Jose, there is no way. You have to do it. Well, not even consider to exit. When you see the numbers coming up, Jay Solar, have a plan, right? So yeah, I guess that's it. Consider to exit. Dimitri, take care. Have a good one. Safia, you too. Enjoy your weekend. That step-by-step path, guys. Mike, take care. I'll see you next week. Post in class. Use your spreadsheet. And Jose, you're going to have to put your whatchamacallit, your password in every time. Don't you want it password protected, though? I mean, your bank is. It won't let your computer automate it for whatever reason. That's okay, though. It's only, 8 seconds of your life? I guess that's going to add up over the next couple of years. It's weird having to put in because everything I have with passwords is automated. That's the only thing that I have to put one in. Oh yeah, 8 times during the morning crash. That is going to add up. So Jose, are you doing everything to keep it from crashing? Like, are you going through all those things? And how many charts are you running? Are you drawing on the charts? Because you like to annotate your charts, right? And not take a picture and annotate. You like to type on your charts. 8 charts at the same time. So what I would suggest, and I'll make suggestions that aren't trading related. I do too. But I find that the more that I write on a chart, the more likely it is to crash it. Yeah, run that benchmark. And what I found is, man, I thought I had the best stuff going ever. I really did. But when I did that benchmark, my processors are fast. My memory is great. But my graphics card is lacking severely. And that tends to be the problem. So if I find out, or you find out that you have a lacking, it just crashed. It heard me talking about it because I was messing with the drawing stuff. So if you find out that maybe your graphics card is lacking a little bit, that's just a little more fuel for the fire. More tick data. That's the biggest one. The ES is moving a lot more than crude, which means that there's a lot more ticks in that 10 days back, which means it's just going to take a little more time. You have it? And you know what? I rarely do, Joel, but because my NinjaTrader 8 heard Jose and I talking about it, I guess it decided to do it. So I'm bringing up my NinjaTrader 7 right now as we go through. Never fails. I love it. And guys, it goes back to the better your computer is, the easier it works. I've posted this a couple times. Most people don't want to have to upgrade their computer, but it's just a tool, right? It's just a tool. And your computer is one of the tools that you use to be a trader. So these guys put together something for Nexgen users. They've got the laptop, and they've put together this deal with all this stuff where you get the laptop, you get travel monitors, free upgrades, all sorts of other stuff. You save $1,000, you end up paying like $3,300 for all the stuff if you put it together. But John was telling me that this $3,000 for this computer, it's about a $5,000 computer. And word on the street is it is a bad mamma jamma. So, and I've heard that their follow-up in tech is really good. Exactly. If you've ever had a job where you need tools, there's a big difference between your Harbor Freight drill and your top of the line drill, right? And I love Harbor Freight because I don't do things for a living. But when I was working on motorcycles, I spent money on my tools because I needed them to perform. Same concept, really. And there it goes. You keep RAM usage as low as possible? Yeah. And you upgraded the RAM and the DDR5? Yep. So, Steven, you've probably got something comparable for a couple grand more. But, guys, it really is. It's a tool. I'm a tattoo artist outside of Nexgen. It's something that I've done for the last decade. And there's two types of machines that you can draw on people with. And one of them is cheap and difficult to work with and has problems. Or you can spend money and really get something really great. NT8 still crashes. I like 7, guys. I'm still on 7. I love 8. And I'll teach the class with 8. And 9 days out of 10, I get 0 crashes on 8. But when I'm putting money on the line, I'm really looking at 7. And I like it. So let's get back to this. Post your pictures, ask your questions. Every time you get in to a trade, make sure that it's checklist, right? Make sure that you're using that checklist. Make sure that you have reasons that have been proven to win more than they've lost to take the trade. Annotate your charts, guys. When you post them in the room, give me information. Tell me why you did what you did. Nope. So, Jay, what I do, and guys, I'm happy to share what I do. What I do, Jay, let me find a picture and it'll just show you. Excuse me. Here's an example. I'll do my analysis on 7. So I'll use my NinjaTrader license to run 7, and then I'll use Apex's license to run 8, but I'll do a 13.2 and a 5.1, everything with all the synthetics, and I'll do a 5.1 chart, just one 5.1 chart on 8 with no synthetics running, and this is where I'll execute my Apex account. So for me, it works great. So I literally run 7 and 8 at the same time. I use 7 for all of my analysis. I use 8, one chart, no synthetics for nothing more than execution. And again, I won't tell you guys what to do, but I'll tell you that it works great for me. So if you want to try that, but you do have to have a NinjaTrader license for 7. So where you input your user license on 7, mine is the one that I've been using for years. And then on 8, I use the one that's provided by Apex. So guys, annotate your charts. Tell me everything that you can. Write your rules out and confirm and validate your rules. I had odds favorable momentum. Don't just write rule number 1. This is what I had, and this is why it gave me an advantage. This is what I had, and this is why it gave me an advantage. And if you do that on every chart, what you start to find is that you're more inclined to follow the rules, because if you have to type termination condition, you're going to be less likely to trade into it. And then using that spreadsheet as the second half, right? Creating that database, those perfect looks. What's it going to take to get you in? And don't just take a picture and ignore it, guys. So this weekend, you've got 48 hours. Take my spreadsheet. Let me give it to you again. Take my spreadsheet and go through every one of those pictures of high probability trend trades, every one of those pictures of those 50-50 trades, and look at the entries. Start focusing on those best of the best entries, because that really is the first piece of the puzzle. Great entries create amazing management opportunities. And then once you have those entries, you know what you're looking for, that's when you define your management plan. And initially, a mechanical approach that eliminates emotion or opinion, it tends to be the most straightforward approach for new users. And remember, you can alter your plan when you're done with the education. You can alter your plan as you learn to read charts. And the most mechanical plan out there is if you trade 2 contracts, your initial stop will be 12 ticks. And then that will be adjusted outside of the window of opportunity, right? That place where the market shouldn't go. Your stop will be moved 2 ticks above or below the reversal bar in the direction of the trade. We had a great lesson on that one today. Your first profit target is 100, at which point your stop moves to break even. If it's hit, the second target will be 200. So guys, in this PDF that I'm putting in the room one more time, it visually shows you how to mechanically manage trades. No opinions, no emotion. Here's your perfect entry inside of favorable large triggers. Your initial stop is typically 12 to 14 ticks. It may be more and it may be less, but it's beyond where the market is likely to go. It's outside of that window of opportunity. Your first target is 100. Your second target is 200. When you enter this trade, pick your hands up. There's nothing for you to do. Either your stop is going to get hit because it's one of that 20 to 30%, or you're going to get a reversal bar in the direction of the trade. And if you do, this is where that mechanical approach, there's no opinion. I'm going to move my stop 2 ticks above that reversal bar in the direction of my trade. What have I done? I've minimized my risk, right? I've gone from outside of the window of opportunity all the way down here because the market started to do what the market said it's going to do. And there's nothing to do now. I'm either going to get stopped out of my trade or my first target is hit. That's my only options, because for my first 30 days, I don't care about anything other than this entry. I'm just learning to get into the market at the right spot so I can learn to manage it. If my first target is hit, $100 goes in the bank. They can't take that from me. And now I have a break-even stop, which means not only did I get paid on this trade already, but I have 0 risk. And what that does for the new user is there's that mental, that dopamine kick from winning the trade. And then after you win that trade, you have absolutely nothing to lose looking for that second target. So at this point, I'm not moving my stop again, ever. Either my second target is hit or I'm out of this trade break even after making $100. So the entry, Joel, where do the entries come? We wait with a limit order, right? Waiting for the market to pull back to the area. So I'm in this trade with the market coming up. My initial stops where the market shouldn't go, but when a reversal bar prints, that's when I can reduce my risk, right? I don't want to move my stops too soon. Because what if I go, well, I hope the reversal bar happens here. I'll put my stop right there. Or more likely, what if I go, well, I hope the reversal bar happens here and I put my stop right here at 93. Well, then I get stopped out of the trade and then the actual reversal bar prints. So I wait for that to print completely and then I move my stop 2 ticks above it. Yeah, it allows you to reduce risk, right? So when you go to the entries, entries taken, stop where the market shouldn't go. Reversal bar prints, reduce risk below the reversal bar. So in the example we have here, is we're just reducing risk above the reversal bar because it's a short trade. First target hit, break even, feeling great. The only thing that's going to happen is either it goes to the second target or I get stopped out break even. Guys, the truth is that you're going to have a lot of $100 trades with break evens as you're learning to read your indicators. If you're embracing that mechanical, and that's okay because all you're doing is working on entries, right? But every perfect entry creates an opportunity for management. It goes back to that spreadsheet. I can take a trade and I can take quick profits, but then I can read my 13.2 and take that, and I can begin to learn when it's okay to begin holding beyond that $200 trade. Or I can use the concepts of multiple divergences in the same location to help me know when it's appropriate to manage out of that trade. And that's all you're doing for the first 30, 60, 90 days. Is if you allow yourself that time to practice a mechanical approach to a checklist-based entry and a $100, $200 automated exit, you're learning to read indicators, you're learning to create trust, you're learning to recognize patterns, and then you can adjust your targets based on experience later. So let it be easy, right? Let it be easy, let it be focused. And then here's the big kick, and guys, this is great timing because right now Apex is doing a 90% off sale, except that you may be less capable of a trader than you initially believe your first time out. Guys, I felt entitled to win. That's where that phrase came from. I believed when I went live the first time that I was entitled to win because my last name was Novak. Before risking your capital, now you can use a trading prop firm like Apex, and you can control, like right now I control $50,000 worth of their money for $34 a month. Now it's 90% off, but you get to keep the first 25 grand, 90% after that. But what you're doing is you're testing your trading plan, right? You've established your entries, you've learned to manage it, you've done it repeatedly, you've gotten feedback, you're taking the right trades. Guys, now you're going to test your plan. What you've been doing on Simulator, you're going to move over to one of these prop firms and see if you can do it with a little pressure. It's the difference between making that 3-foot putt in your living room and that 3-foot putt on the course in front of your buddies, right? Starting out, use their money. And guys, you will thank us later when you realize what you don't know about yourself yet. And then when you make money in a real world setting with someone else's money, trade your own money, right? But there's really no reason to. The actual harm comes from thinking you're a better trader than you are and blowing out a large sum of your capital. For those of you that don't know me, first time I went live, it was a $5,000 loss almost instantly. Took me 2 days to drain my account. I could have lost $35 instead of $5 grand with a prop firm. That's the difference between ramen noodles and filet, right? So guys, this is your path. And I love to share this picture because this is about the most realistic picture ever. You get your software. It looks like fun, right? This is awesome. I'm going to be a day trader. I'm going to get rich. And you're having a great time and you pay attention in class. And then you're like, man, hold it. I'm going to have to study a little bit. I need to work on those termination conditions. I need to work on making sure I have odds favorable momentum. And you're not sure what you're doing. You decided you're not going to take pictures. And you decided that you're not going to post in class, right? And you decided that the spreadsheet is for suckers. That feels like a lot of work. And you decide that you have reached badass status. And this is where the average trader goes live too soon. This is where I lost $5,000. And for some of you, $5,000 isn't a big deal. For me, it was a lot of money at the time. And I got blown out of the water, and I hated day trading, and I hated my brother, and I thought the software was stupid. And I was like, ugh. And guys, this is where you're either going to take the kick in the teeth and realize that you hadn't put the time and effort into being good at this, right? You're either going to quit and you're going to be angry for the rest of your life at Nexgen, at yourself, or you're going to say, you know what? I didn't follow that path. Mark told me every day in class, 5 times a day, Mark told me that the best way to get to where I want to be is to post my trades and use a spreadsheet. But I didn't listen. I didn't believe him. And I'm going to do it now. And guys, that's exactly what my path was. When I hit this point right here, I remember the call. I called my brother and I said, hey, you know what? You told me to take pictures and you told me to participate in class and you told me to use a spreadsheet, and I'm going to follow the path. And guys, then it makes sense. And then you're like, wow, did I really just do that? And then you get to I did it. And guys, it was right about here. Actually, right here where it actually made sense. This is where I asked John if I could teach a 101 class. That's where I asked John. I said, John, you know what? I've been through the pitfalls. There you go, Miel. That's the one for the Nexgen users. Give you that link. Guys, this is the point where I decided to be an educator for Nexgen. This is where I wanted to take everything that I screwed up about the cult trade. Yeah, definitely. Look me up on Skype. Let me know. Ron, enjoy your weekend, man. I hope the weather's great for you. This is where you guys got stuck with me about 1.5 years ago. And every day that we learn together, every day that we take pictures together, every day we talk about your trades, every day that we look at advantages, 72 going on 80. You know what? I'll be in Houston this time tomorrow, and it's supposed to be 80, and I am excited. It is 33 here right now. If you ask anyone that's been with Nexgen over 1 year, it works. But you got to go through it. It's like AA, right? It only works if you work it. And I think that's my day. What do you guys think? Did you learn anything this week? 3 grand on your own until you listened? Yeah, Bobby. I was 5 grand in 22 trades. Not one winner in 22 trades. And I couldn't tell you why I lost. I had absolutely no idea what I had done wrong. And it's a little embarrassing to admit that to you guys. I teach the class. I've watched John for the last 25 years. And I still fought everything that he told me. I still fight him sometimes. I think it's a sibling thing. But you've got amazing resources, right? You've got what I consider to be the best education out there. All you have to do is use it, embrace it. I'm not going anywhere, guys. You're stuck with me. And my goal is to get you exactly where you want to be. All you have to do is participate and let me help, and you'll be good. And I think with that, I'm probably done for the day, unless there's a question. This is very cheap education for a great living. And guys, I don't just do it here, right? A lot of you guys have sent me an email and said, hey, Mark, I'm working on a trading plan. Will you take a look at it for me? Hey, Mark, I had this question. I was a little too shy to ask in class. Don't be afraid. My email works. I'll get back to you when I can. Don't send me 20 pages. And if you're a part of my classroom, I'm going to tell you, I'll give you your answers Monday in class. But if you have one thing, you're like, man, Mark, I'm always participating in class. I had this question on a Saturday morning. I could really use your help. I'll do what I can to help out. And guys, that's it for me. Go get a supercomputer. Make sure you have your lifetime license. Enjoy your weekend. Stretch your legs. Get some sunshine, guys. Don't make it all about trading. Life's about balance. Spend a little bit of time on market replay. Review your rules. Make sure that your plan is solid. And then come back Monday ready to work, guys. I want you guys to keep me sideways busy with all of your pictures and questions. I need a little job security here. Actually, no. John Novak is here Monday. Guys, be here Monday. The guru himself is going to teach this class. John Monday. Everything he talks about will focus on what we talk about, but he'll teach you some tips and tricks for those of you that are getting to that next level. It'll be pretty cool. Guys, y'all take care. I will see you Tuesday. Have a happy and safe weekend, and y'all be good. Talk to you soon.